Oh boy, this could be a very exciting week for AMC stock. Last week on Thursday, AMC rallied 15%. On Friday, the stock rallied 2%, and that was due to a lot of option activity. Now, the large expiration, July 15th, well, that's this Friday. So you could be looking at a little bit of a gamma squeeze here, but even on a technical basis, we're looking beautiful. And I really want to talk about how we look on this technical basis and what has really happened over the last 2 trading days or so, but also at the same time go over the data for this week that is very important that you guys know. Like CNBC says right here, another hot inflation report and the start of earnings season makes for a challenging week ahead. So we have a lot to talk about, kind of a mixed bag here, but I do think overall it's going to be somewhat bullish, right? AMC is looking very, very good, and I don't really see that falling apart, especially this week with all of the options. So we're going to talk about a price prediction as well. Stay tuned and let's make that money. Hit that like button and subscribe to the channel. It is absolutely free, 99. Thank you guys for doing that. If you guys want to come trade with me live in real time, link down below in the description. It is a great time to be a part of that program, and really just another tool to help you guys be great at trading if that is something that you guys want to do. So first and foremost, this article I just read, the headline, the key points: consumer inflation data and the start of the second quarter earnings season could set the course for markets and result in volatile trading in the week ahead. The June consumer price index on Wednesday is expected to show headline inflation, including food and energy, rising above May's 8.6% level. And we'll talk about the actual expectation, what markets are expecting for that CPI report coming Wednesday, and potentially what it could come in at. It's kind of scary. Now it says, in quotes, the street has not really changed the earnings estimates. Revenue growth has ticked down, margins are compressing, analysts are leaving their estimates unchanged, said one strategist. Quote, if there's going to be a read adjustment, this is the time. Now that is very true throughout all of the bad data that we have got in Q2, Q1 2021 so far. Well, earnings estimates have not come down. We're still expecting record profits, record revenue at these companies, and that's simply not going to happen. So it's setting ourselves up for massive disappointment. The question here is that priced into the markets? Have markets just already priced in lower earnings for these companies? I think for the most part, yes. I think a lot of stocks are trading at stupid valuations, to be honest with you guys. A lot of small caps, look at Fubo, look at Square, those stocks are trading at stupid low valuations, and I think it's already pricing in a lot of earnings misses and a lot of earnings revisions to the downside. So that's just my belief. I think the real panic comes later in the month, a lot around July 27th, July 28th, and that whole week really, when you get Apple, Microsoft, Google, Amazon earnings. So there is that for my full thesis on the crash that I see coming. Stay tuned to the channel. We will talk about that a little bit later on today and even tomorrow. That's going to be something that is very important that you guys want to pay attention to. I think that's where a lot of downside plays could really come back into play again. So let's get into the other data that we have for the rest of this upcoming week, because you guys already do know CPI report comes out 8:30 in the morning on Wednesday. That's what we were just discussing, and the expectation for that is as high as 8.8%. That's the average estimate, which is just wild to me. The all-time high was 8.6%. That's when markets started this 12% down move that we have seen really throughout the first couple weeks of June until we bottomed June 17th and started to make a recovery. This was due to that CPI report coming in really, really hot, and then we started to get bad economic data around the same time, and that fed into each other. So that is potentially what we're looking at again, maybe not in the same degree, but if we come in over 9%, markets are going to freak out. They're going to start to price in this 1% rate hike, which is right now only about 7.6% of market participants are expecting that 1% rate hike. So it's not priced in too much, but if we get really hot CPI and potentially good retail sales coming on Friday, that will solidify that 1% rate hike in my personal opinion, and that's what we'll get. That means bond rates have to go up in a big way, and likely would start pricing that in, and that could mean some substantial downside for the markets as bond yields do go up. So retail sales, like I said, 8:30 in the morning on Friday, and then on Thursday, can't skip past it, it's the PPI. That's going to be important, another measure of inflation. I don't think it's obviously going to hold as much weight as the CPI or the retail sales, but nonetheless, that is a big data point that does come out on Thursday. The expectations for Q2 GDP are still coming in at a negative 1.2%, meaning, we're in a technical recession, and given if the banks and some company earnings that report this week, if those are not good, well, you're going to have a lot more fear of that. You do have Pepsi, which reports on Tuesday. On Wednesday, you have Delta Airlines. On Thursday, you have TSMC, Morgan Stanley, JP Morgan, Conagra Brands, Cintas, First Republic Bank. And then on Friday, you have United Health Group, Wells Fargo, Citibank, BlackRock, PNC, US Bank Corp, BNY Mellon, and State Street. So a lot of financials for this upcoming week on Thursday and Friday, coincidentally after the CPI report comes out. So, it could help, it could hurt. If you start to see profits going down in a big way, margins, more defaults, that's where you could get, a lot of people get fearful in a very short amount of time. Do not overestimate or underestimate what the markets can do right now. We could very easily fall another 15% from here, or we could rally 10-15%. The latter looks more unlikely. Now let's talk about AMC stock, because there's really a lot that I do want to talk about, to be honest with you guys. We need to go over the Ortex data and really focus on the technicals, because I think that is very telling. Right, you want to pay attention to the chart, but nonetheless, for the estimated short interest of free float, 17.77%, free float out on loan 27.13%, shares out on loan almost 140 million, 100% share utilization. It says the cost to borrow is 14.24%, days to cover at 3.42, the cost to borrow max at 15.66%, cost to borrow average at 13.21%, cost to borrow minimum at 10.79%. So these are not crazy high numbers, guys, but the minimum is now almost 11%. That is very good in regards to it's a lot. I mean, if you're paying 10% to borrow stock to sell it short, one, that just doesn't logically make that much sense. Why are you going to do that? That means you have to see a pretty big move to the downside, and if you don't, then you're just double clap, because that cost to borrow is so insane. And this is typically paid out on a monthly basis. So I mean, when the average days out on loan for some of these short positions is 60, 75 days, then it doesn't make a whole lot of sense to take stock out and short it at this point. A lot of people are using the options to short AMC stock, with a lot of those close to the money puts that you will see on a day-to-day basis that does push down the stock. So I think that could likely be the case in this upcoming week. Obviously, if there is some of that fear, that is what could theoretically push us down. Now, I don't see that happening. For July 29th, you got 73% of option activity, which is calls. For this upcoming week, 73% as well of the total options that are on the chain is 73% calls. So the option market, how people are positioned, it definitely does look bullish. Just at the $15 strike, you have almost 24,000 options that are sitting on the option chain, and that could make for some pretty big moves, and we'll talk about that in the next video later on today about a potential gamma squeeze for this upcoming week. Because as you guys probably do know, if you watch the channel, if you follow AMC, you have about 50,000 calls that are currently in the money, but you have 485,000 calls that are out of the money for this week, and almost 75,000 puts that are in the money, which also can help you with a gamma squeeze. So that is very key. You guys definitely want to pay attention to that, and we'll talk about it more in the next video. But really, for this week, I think it's a big technical breakout potential as well, because we broke out above the 50-day moving average, kind of what happened back here in March, right? You broke out above the 50-day moving average, you came up here, tested this level as resistance for a couple days, and then you've seen a really big day, and that's when you went to, you know, $30 per share, and then we broke out again, went to almost $35 per share, and then came back, you know, to earth, crashing down later in the day to close just barely positive the day after. So we're coming up, we're testing this level at 15, found some resistance. It's very possible that we do test it again coming tomorrow and even on Tuesday, and then potentially by the end of the week see a pretty big breakout. If we can break out above the 100-day moving average at $15.76 per share, that's where you could make a pretty big move to the upside, back to close to $20 per share. That's where you're going to see more resistance. $21 more specifically looks to be that level where I would expect to see some resistance. 200-day moving average up there at $23.23 per share. If we can break out above, you know, 100-day moving average, 200-day moving average, and that $20 level will be key to watch. Considering how many options we have for this expiration, it's very possible. And don't be naive to that. Not to say you guys should go YOLO your portfolios in AMC options, but it is a very real possibility, especially what we seen last week. I mean, we're coming off of a 17% gainer over the last 2 trading days. So to see a little bit of resistance and then finally break out, you know, a couple days from now, probably what I'm expecting. And as far as an actual price prediction, I do think we will be above 15. I think we're going to be close to, you know, $17, $18 for this week, but it is very possible that we do come back down and find support, you know, around this 50-day moving average again at $13.04 per share. If CPI comes in really hot, if, you know, the markets are not favoring, you know, growth stocks or stocks like AMC. So that's really where I would put my price target, in between $17, $18 per share. I think that is very reasonable and respectable. But I don't know if it's going to happen on Monday. It could be later on throughout this week. When the markets are going down and AMC stock is going up, that does help to squeeze out more hedge funds from their position. So that's pretty much going to be all for this video. Other things you guys want to watch is UUP. This thing is breaking out to new highs. This is the ETF. I believe it's an ETF for the US dollar, and this shows you fear. This is the US dollar is strengthening, and that basically means global currencies are weakening because people want US dollars for safety because they are fearful about growth. We are at the same levels we were during the COVID crash. So that's showing you guys how much fear there is out in the world right now about a possible recession. So watch to see if the dollar continues to break out. If that does happen, that is not good. That is a negative thing for foreign exchange and American businesses doing business abroad. So pretty negative thing. That's the one thing that you guys definitely want to watch, as well as the bond yields. If we do continue to see a 1% rate hike that gets priced into the markets this week, and specifically on Friday, I want to see with retail sales, on Wednesday with CPI, that's going to solidify it, in my personal opinion, then you're definitely going to see the bond yields start to tick up, and you can watch that on CNBC. Just go to bonds, and you want to look at the 10-year treasury. If that continues to go up in a big way, well, that's going to cause some downside for the stock market. Nonetheless, that's going to be it. You guys enjoy the rest of your day. I will see you in the next one.